Hello, everyone, and welcome to another edition of the Daily Forex Market Update. I hope you all had a very good weekend and got what you wanted to get accomplished. In this update, we're going to look at quite a number of currencies and quite a number of currency pairs, and there's a theme that has emerged over the last month or so with a lot of these currencies, and that's consolidation, and the markets are consolidating across a number of currency pairs. Now, in front of me, I have the daily chart of the euro versus the US dollar, and on the day so far, we have formed a slight doji going down to the 15-minute chart. We see that the market dipped down. Market opened up on Sunday, dipped down from roughly 106.20 to 105.20, 100 pips, and is coming back up. But remember, the broader trend on the euro is still down. We broke out of this triangle, not this triangle, but this uptrend line was broken last week, and the market momentum is still down. The trend on the daily chart is down, and the trend on the 4-hour chart is down. So I would assume you'll be better off looking for selling opportunities in a downtrend, because that's the method I teach, and that's a method that I trade, and that is trend trading. And in a downtrend, it's fairly simple. We ignore all buy signals and just sell the market. Okay, so that's what's happening in the euro. Now, it will be interesting to see what happens at the previous low. This previous low point of 104.59. The market has to trade below this 104.59 area for the bears to get even more traction. So we are some way from it now, but that is what we're looking for with the euro. Taking a look at the pivot points for the week on the euro, we see that taking a look at, let me just apply the pivots formula, my pivots, pivot console. Okay. So looking at the pivot points for the week, we see that the weekly pivot point, the weekly S1 is at 104.31, and the weekly S2 is at 102.65. Looking at the monthly numbers, we have a monthly S1 at 103.85 and a monthly S2 of $1.03 roughly. So that's what we're looking for. This area around this 103.85 up to 104.31 could be very interesting for the euro for this month, because it coincides, not exactly, but closely with this 104.59 area. So we could see a snapback near this area in the euro. So that's definitely something we'll keep an eye out on. Okay, moving on to the British pound. We see that the market last week closed down and is recovering slightly. Looking on the weekly chart, and you remember we spoke about the fact that these were the lows near this 148 level. Last week the market did close below this 148, and it actually did close below the 146.35 level. Now it closed 5 pips below at $1.4630. So we could see two things happen here. We could see the market bounce back up to test the retracement level and come back down, or we could see further selling in the British pound. So that a close at that level is not very good for the technical picture for the bulls with the British pound. For pressure to ease up off of the bears and the bulls to re-exert control, I would want to see a close all the way above this 152 swing high. If we do get a close above 152 swing high, then that will put the bulls in a better position with the British pound. Okay, moving on to the USD Japanese yen, and this is one of the pairs that are in a consolidation that I spoke of. And just to reiterate, when you are in a consolidation, it means that the markets could be moving or could be setting up for a breakout. So that this is the time when we are looking for opportunities in the market. This is not the time to say, oh, the market is boring, let me not do anything. This is the time we should be looking and setting up our trades for the breakout. That's if you're trading these swing trades and the 4-hour charts, the daily charts. You are definitely looking for these breakouts, the breakouts on these charts. So the USD Japanese yen is in a triangular consolidation, and quite honestly, this could break either way. Could go down, and if it goes down, we'd want to see it go below this 116 level. Then we will definitely get some strong selling in the USD Japanese yen, or it could breach this 122 high and continue further up. So that's what we need to look out for with the USD Japanese yen. Okay, another market that's in consolidation is the Canadian dollar, and we're in a channel here, as you can see here, and 128 is the high, and the low is at 124. So we're looking to see which area this market breaks. And the rule with technical analysis is that 80% of the time or so, roughly, is it will break in the direction which it came, and 20% of the time it could go in the opposite direction. So we just have to wait and see. But either way, it should present some good trading opportunities for us. Now, taking a look at the crosses. Okay, and before I go to the crosses, let me update you on the triangle in the Australian dollar USD. We drew this triangle last week, and we see that the market is currently challenging the base of the triangle. Support in the Australian dollar USD is down at this 75.60, down to the 75 level. And if we get a convincing close below this 75 level, that could usher further selling in the Australian dollar USD. So this is another currency that is in consolidation. Looking at the crosses, a cross that's in a triangular consolidation is the British pound Australian dollar. As you can see, the triangle, the boundaries of the triangle are drawn right here. And I'm expecting it to go to the upside, but again, 20% of the time the market could break below. So I'm just pointing out opportunities for you guys to be looking to trade and looking where the setups are currently. Some of the older setups that we are in, it's the Australian dollar, the euro, Japanese yen. We spoke about this downtrend, and we're currently in this trade with our members. The euro is continuing down nicely as anticipated, and we're also in this New Zealand dollar Canadian dollar position, and that is pulling back slightly. We're along this market, it's pulling back slightly, and it looks to be getting support near this 93.50 level. So we'll continue to watch it. Okay, so that's it for the daily market update. If you would like these signals in your account, you can click the link below and sign up to have them sent to your account automatically. And just a note about the signals being sent to your account. The program is not designed to be a 1 month or a 2 week type of program. It's for folks who want to see large capital appreciation over a number of months. So it's an investment. It's not just some one-off, one-shot thing. Look at it as an investment if you're investing in the signals. It's a very good investment. Rate of return, we're targeting between 40 and 60% annual rate of return. So it's no, I'm not saying you'll definitely get that, but that is our or that's what we're shooting for. So if you're interested in the signals, click on the link below. And thank you very much for listening to the market update.